The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here. We're looking at a Dow that was up very sharply. It's pulled back quite a bit. It's still up 81 right now. This is a key 2 days because of the monthly chart that we're looking at. What happens with the monthly charts? Where we close, based on the patterns that we look at, if we had to close right here, it would say that the Dow is holding okay. The S&P, the Dow up 80 points. The S&P, it really needs to move above that 14-period moving average. It's at 42.06 now. By Friday at 4 o'clock, you already want to see it closer to the 14-period moving average, actually above it at 42. I'd put 42.85. That's just asking too much. Although you never can tell in this particular market. Closing here says, uh-oh. Now you have to consider the Chapman Roman candle of January with 48.18.62 high. The low that we made at 41.14 on the 24th of Feb, that becomes almost a downside target because the pattern then starts to look like an H. And I'm not messing around with this particular pattern. Let me just show you right now. You can go back. Actually, you can go back almost anywhere. But on a monthly basis, remember when we closed that candle of October 2007 at 1576.09, almost a doji candle at an all-time high, with a left side, right side price time match from the 1557 March 2000 high. Beautiful extended right side V-shaped pattern. And then it pulled back to the 666.79 low of March of 2009. Well, the way it broke out to the upside was really important. And that Roman candle that we had in November of 2007, it looks small now, but at the time, look how big it was. It was pretty big. And that's it. The rule of thumb with the Chapman Roman candle, we saw that with the green one the other day, excuse me, is that within 1 or 2 bars, if the price starts to trade in a shorter time frame for a certain amount of time, in the shorter time frame, below the midpoint of the long-legged wick, be careful because you can retest the left side low. Well, it held for the next month. Following month, it didn't just break down, it formed an even bigger Chapman Roman candle, which it took out the low of 2 months later, it ran up, and then from about the 1440 level, it just plunged down to the low of 66. So I have great respect for this particular pattern. I'm not arguing with it. It's one of the reasons why subscribers have built up a big cash position, huge cash position. But in the meantime, back in the short term, I'm beginning to see signs that in the rotational aspect, I should finish all the others. QQQ had a really strong rally yesterday, made a round number low after the 315 round number low. That was testing the 317.45 low of the was that the 24th of March? No. The Qs were a little bit out of sync. 14th of March. And ran up to 371 and came down to the 315 round number low yesterday. Now it's trying to find some kind of, establish at least some kind of a base based on my on-balance volume and the stochastic at 6%. Doesn't mean to say that it has to rally. It just says from this level, only based on the on-balance volume, there's a chance that there could be some kind of an upside spike. If it garners enough strength, 327, only 6 points above this, where we are right now, would be the target, the 9-period exponential moving average, and that would be the start. That's not to say everything's kosher and we're going much, much higher. It just says you've established an arch formation that had an unsuccessful test of the left side low in the sense that it went under, but it has a successful aspect to it because the close, 316.76, was below the previous low, but the very next bar was above. So now what we've had is 316.86 was the low on the 26th of April. The 27th, yesterday, was 315.00, and now we're above it. So you had out of, I usually say 2, maybe 3 bars after the H pattern, the dreaded H pattern. If it's above the left side low, in this case the low of 317.45, then there's a chance that you've established at least a decent 15, maybe even 20% chance of, a chance of a 15 to 20% rally. I don't know. It's not acting well right now, 319.27 after hitting 323.51. Well, we're going to watch this very closely. Okay, so that's that. I just wanted to go to the IWM, and then we'll get back to what we were talking about before. IWM is at 185.90, down $1. It made a new unrecovery low. What do we call those? You call them recovery low highs, unrecovery lows. Unrecovery low. It's made a new low below the 187.92 low of 24th of February. Not good. Not good at all. In fact, the weekly chart has now gone to a leg E. It's actually negated the cup formation at this particular point. So this is not very good. Dow's only up 60, S&P's up 18. Yeah, 19. So now let's go on to the other aspects. We want to look at SMHs. They've been lagging terribly. They've had a very nice pop to the upside, up 370 at 231.21, way underneath the 237 low of mid-March. This is the aspect that I consider to be very important. We've lost the energy of the energy. Energy is crude oil. Energy is chips. And I have to think of it as if you've lost two parts of it, in that sense that the crude oil has gone to record high, almost record highs, holding very well in the 102.04 area, in the hundreds. It's not a great sign, but it doesn't mean to say that you can't have select stocks really move a market, the index that is in, much higher. But we haven't got that yet. In fact, it's starting to fail. I don't like that. Now, I want you to do this. We're looking at the EUR USD. This is the Euro EUR USD. This is the euro dollar currency pair. Basically, think of it as the euro. Look at this arch formation in the monthly chart, but look at the spectacular left side, right side price time match. Now, I have over the years, I've been able to modify this a little bit. And as it stands right now, there's a technique I use that says, if you've got a left side, right side price time match, where you've used the plumb line and it looks like it's the correct plumb line. In this case, the plumb line is the midpoint I've chosen of April of 2021 at 1.170. If you're using that and it takes a little longer to get to your price, but it's in the down mode, in this case, the down mode, be careful, because when it hits that level, it can go right through it. 1.062 was the one back in 2020.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Basil Chapman, Dow's up 100 and S&P's up 27. The big surprise has to be that there's a sudden burst of energy into the close today and then rallies tomorrow. That to me would be the most pleasant surprise that I could expect. I'm going to go to our first caller, actually. So far, it's our only caller. Hi, John in Philly. How are you?
Basil, I'm doing very well, and thank you for taking the call, sir.
My pleasure. What
Basil, I have never asked you about this name. I'd like to ask you if you could bisect price and your Chapman wave countdown, GDXJ, specifically, Basil, please, for both the daily and the weekly charts.
Right, folks, we're looking at, this is the junior GDX, this is the gold miners, this is the junior, so it's sometimes there's quite a disparity in the shorter term, but overall the picture should usually be about the same between juniors and seniors. But we've seen that some divergence, especially when you're looking at something like the Russell 2000, Russell 3000, Russell 1000. So there's a difference there. But if you don't mind, John, I'm going to do this. For some reason, I used to at some point. I haven't looked at it for ages. I had this all notated, the GDX. I'll do this as we're talking right now. The daily chart from the little doji candle low that was made round about the last day of January. There goes peak A, B, C, D, E, F, and then A, B, C, and a D. So what I'm going to do now, I want to be looking at this left side, and I'm going to, just for the moment, for my own satisfaction, I want to see how close it is to, look how close it is to the gold miners. Now, I know you are very specific. If it's the futures, you want the exact month. If it's the, if you look at the, whatever charts we're looking at, you like to look at what you've studied as to be the core to your question. So in this case, I'm only using the GDX because I got it fully notated, but your question is the GDXJ. So I'm going to go back to that. Now, if you look at the GDXJ, the big difference, and the reason why I like to compare same names, even though there's a variation, it could be, say, a value like SPY and the SPYV, which is the value. I like to do that because I want to see where the 200-period exponential moving average is. Keep your eye on the left chart. I know that you're looking through our various means here at through TFNN's Tiger TV or live in the den. So I'm going to say to you, look where the 200-period is. It's at 44.73. You and Tom like to talk about ICE. Well, the ICE was the 200-period moving average, which was a fantastic resistance, then support back in March. Then it broke out. It never got even close to the 200-period moving average on every pullback. And then what does it do? It stalls in the 45s, just above the 200-period moving average. And now for 4 sessions, the gap down hasn't only not been attempted to be closed, but we've gone and closed 3, well, today's hasn't closed, but there are 3 sessions below the wick of the doji candle of the 25th. So the number one, I immediately say the GDX on a daily chart has gone from a sell signal to a confirmation of a sell mode. So the down arrow is confirmed, and the price with the MACD weak. Now, the one thing that I'm looking at is the stochastics at 3.33%. Now, what happens very often not very often, almost all the time, in the slow stochastic, I did this recently, I don't know if you were able to see it, but I had a whole session that showed that even bear markets like ARKK, this is Kathy Wood's ARK Innovation Fund, still didn't have, like the stochastic on the upside, when it's holding above 80%, as long as it's holding, that's very good. That's what you want to see. But in the stochastic, when it goes below 20%, there's no guarantee that it's going to stay there, even if the price keeps coming down. So in this case, this is the longest and deepest it's been to the 3.3% level. I'm running through the chart here since around about September of last year. So that's just saying to me, internally, I'm not seeing anything in the chart that says to me anything other than a bounce is possible in the JDX unless there was really a catalyst for it. I'm not going to do my relationships right now, like dollar and everything else, but I am going to say, let's go to the weekly chart. And you can see the weekly chart has gone peak A, peak B. I call it gray because until I get a confirmation that leg B is holding well and could even go to C, I call it gray. The MACD turned down. That's okay. The 9-period is way above the 14-period moving average. That's good. The stochastic is at 78%. That's still pretty good. It's not at 80 or over, but that's good. So that says now it's also very unusual. I don't have to tell you this, to have a gap down in a weekly chart, because it's just purely coincidence that on a Friday you were at one point, and on the Monday when it opens, if that's on a long weekend, it opens down. And with that said, that's a coincidence, but it is a gap that I'm looking at. It's had a gap before and a continued lower. But look at the candle that we're looking at here. It's Thursday, almost the end of the week, and we've had just a series of red days in the daily and red in the weekly. But here's the interesting thing. If you look at the monthly chart, the 9-period moving average, even though it's had a pretty good rally over the last three and a half months, the 9-period moving average was so close to crossing positive, and now it's flipped back to negative. So it says to me that in the monthly chart, the big consolidation that's going on at this particular point needs a catalyst from the short term, in other words, the daily chart, to be able to move the weekly. And that's going to take even more to move the monthly chart. So that's the GDX. But now I have to, the GDXJ, I have to go to the GDX itself, gold mine market vectors, gold miners ETF, because I've got much more notation there. And in the GDX, I could have done it for the JDXJ, but I'm going to show you this. You see this left side, right side price time match that I had in the cup formation. Now, the rule of thumb there is if it goes above the left side high in the cup formation, it needs to hold at least for 2 out of 3 bars above that previous high. Well, the high in May of 2021 was 40.13. It broke above it. It went to 40.26, but closed at 38.25 the week of the 11th of March. And then it pulled back, And then it had one pop last week, which looked pretty good, actually, for the GDX. It went to 41.61, and then, 48.95, and then opened last week. It actually opened on the week of the 22nd of April. It opened at 41.28, went to 41.61, and that red ugly candle with a gap down of this week says that the 36 level, which is the 14-period exponential moving average, 36.34, there now needs to be two closes above that, because we haven't had two closes above the left side high of May. So I'm just going to say to you, I haven't told you different areas that I'd be looking at for support. I just wanted to explain that the action over the last week was extremely disappointing, but we're holding the daily 200-period moving average in the GDX. We're under it in the JEPs. Today is much weaker. I'll be back in a moment. If you want to stay, I'll keep doing this.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So I don't believe John is there. I think John's back in the den. John, if you're there, just say hi. But I believe that you went back into the den. Fine, because we're going to continue with this. A couple of things that I wanted to talk about within the context of, I also have to look at the price of gold. There's no use, GDX is one thing, gold miners, and the GDXJ, the juniors, one thing, but it really depends a lot on the price. Not a lot, but it depends. We've seen the gold miners move before gold or catch up to gold, but you really need to have gold in the same trajectory, and that's the most important thing. And right now, I'm looking at the wrong place. Let me go here. Here we go. We're looking at the gold is unchanged. It's got very close to the testing level of the 200-period moving average. It doesn't even have to touch this. It's just I use an icon that's there, that's just sitting there, and saying, "Hey, if you need me, I'm here." That's all it is. That's how I use these technical indicators. And at this point, I need it because I need to know that 1866 is going to be the support. Now, one of the things that I've been looking at here is that within the context of the gold monthly chart, the big arch formation, the big cup formation, going from the left side high back in around about July of 2020 in the 2100 area, pulling back and then going all the way back to 2083 on this is the continuous contract, so that's the 8th of March high, whatever that is. The pullback here is all within the expectation that you would find in a cup formation that starts to weaken after it's achieved just about the goal, but it didn't quite get to the goal. And here we're looking at the weekly chart. You can see this beautiful series of patterns that we're looking at. And at the moment, the weekly chart is underneath the 14-period moving average. But now I like to put it into perspective. Look at silver. Silver's acting very poorly right at the moment. And it just says, I'm in a trading band, but I'm having trouble getting from the 23, now 12 level into the 2680s. I don't seem to be able to do that. And that to me says it is reflective of not gold per se, but the area of those precious metals. And it's acting very poorly, way under the 200-period moving average. If I look at SLV, it's pretty much the same chart. If I look at, now, let's do this, and that's what I wanted to do. And I think this is part of the potpourri of things that you need to look at. Look at the dollar. 103.93 was the high today. It's at 103.72 right now. You remember the rule of thumb that I used for the cup formation? You want to see a close, at least 2 out of 3 closes above the previous high, and you do not want to go back into underneath the previous high that was made and hold there as if to say that was a struggle just to get there. This is the lowercase h that goes to lowercase m pattern. And look what happened. Back at the high that was made at about 100.39 in 2014-15, and then in 2015-16 it went to 100.51. These double tops are amazing. Got a whole bunch of things I want to look at. Maybe we'll do that tomorrow. And then it spikes for 2 bars above the previous high. It goes to 103.82, January of 2017. December it goes above. Then the next month it makes a slightly higher high. That's, I believe, January. And that January candle closes underneath. So you had your 2 out of 3 candles, but it didn't hold. And as long as it doesn't hold and goes back in underneath that resistance point, that is really important. So I'm looking at the dollar and I'm saying, hey, it didn't make it before to 102.99. And what did it do? It went back down to the 88.25 low of February of 2018. Remember, April is when we went along the dollar. It went all the way to 89.21 from a slightly lower high to a slightly lower low. 4 cents, but 4 cents is 4 cents. And then what happened? It started to rally. And this rally is only in leg C. So this is saying to me that this is the bigger picture. The bigger picture says at this particular point, you would expect that this candle, which has done a beautiful one, almost a 1-to-1 to the upside in the dollar daily, going to a leg D with the MACD strong stochastic at 95.63, relative strength moving up beautifully in the daily. The weekly chart, everything is good. The 94.74 is the stochastic. And that's just saying money is flowing into the dollar. As long as that money is flowing into the dollar, and even though I think short-term we're getting really close to at least some kind of a pullback, I showed you the euro-dollar chart. Look at this. Plunging below the left side low of 2015, was it? 2020. Sorry, 2020 at 1.0634. And here it is at 1.049 right now. it's taken out there, but this is now in leg F to the downside. So it says it's getting very close on a daily basis to at least attempting some kind of stochastic on the dailies at 6%. That's just terrible. Let's go to the USD JPY and look at this. Leg F. And you did the same thing here. Look at this. This is the weekly chart. Look how it's broken out. Here I'm using fib numbers, and we've got a fib going to 261. Percent expansion has gone above that in leg F. So I'm just saying that at this particular point, I think there are headwinds for gold. There are headwinds for it's not just that it's gold. It's just that I think there are headwinds in the commodities just at this particular moment. So yeah, let me go to what we're looking at in terms of. I'd like to just go to ASA. That's one of my. We don't have it, but it's one of my go-to stocks. South African. It's like a fund. It has 4 or 5 South African gold miners and gold mines in there, and it looks the same thing. Gap down. It's had 4 days. Now here's what I'm anticipating. I think within the next 2 days, it's going to be really important. If the dollar, for the dollar to turn around now, it actually has to have a huge decline. It has to be like a gap down because of something that's said, something economic. And as it gaps down, you want to see a corresponding rally in gold. So as I'm looking at it right now, the risk reward in gold at this particular point says it's more a gamble than anything that I can see. You've had this cluster formation. What's really important about this cluster, I'm going to go to the actual thing that you were talking about, GDXJ. After all, it's silly not to talk about. Yeah, in this particular cluster pattern, you've had 4 lower lows after the doji candle low. I don't like that at all. I have a rule of thumb I didn't know it was actually a formula that people use. I'd always say, you've got to wait. I've got a 3-day rule, but a 3-day rule has within it a bunch of rules. And the first rule of a gap down, now gold gaps all the time because it's a currency. It's like a currency. It trades around the world all the time. But within that context, look, it didn't even take out the high of the gap down bar of the 25th of 44.45. But it did close below the low, and that's my first rule of thumb, that the very next day has to either be an inside bar or there has to be an attempt, preferably with a close above the gap down high. And then it needs to try to fill the bar. The quicker it fills the bar, the better it is. The longer it takes, the more it means that gap was an important gap because it was core to the infrastructure, in this case, the short term. So I'll be
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with a 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, we're back. Let me just finish this up. This is ERF question came in. I'm going to get to the GDX in a moment for the final stay. Maybe he wants to know about ERF. Let me just finish this up here. Your only obligation is to pick out each peak and label it. That's all. So that's what I'm doing. Okay, so let me just say with the GDX, what I'm looking at are the parameters. GDX, J, and you would anticipate, given the type of sell-off that we've got right now, it's trading at 42.25, that just time alone says there should be a bounce, let alone price. But no, this has been red candles 1, 2, 3, 4, 5, 6 days. What I'm looking at here is, on a closing basis, if the low of, this is GDXJ, if the low of the 25th of February, which is at 41.62, if that's taken out, it says it's not so much on the downside. It says that any rally makes the whole 44 to 45 area really strong resistance. And that tells you if that there is a rally above 45.50 to 46.10, say, that you've resolved the downside, at least for the moment, and now you can start looking at the upside. But I just have to tell you that within, what's today, Thursday, by Tuesday, you want to see the GDX trading closer to the 44.73 200 period moving average than to that 41 level. That's really important. All right, enough with that. Now let's go to Mimi's question. ERF. ERF is enter what? Enter plus core, obviously in the energy sector. Leg D in the monthly chart, trading at 11.99, down 11 cents. It made a high at peak E under the previous high, which was, I don't want to do this too quickly. The peak, let me just see. Peak ABCD. Good, loves D's. ABCD. Second peak D. Then it goes to an E, but it's under the previous high. Never a good sign. And it says that the whole area of 11.57 to 11.42 is key support area. So your question is, please comment on ERF, sell. So that you didn't say short and you didn't say add to, you said nothing but sell. I have no idea whether it's a short-term position or whether it's I'm going to do this. Because the weekly chart, the technicals are starting to fail, but the 9 is still way above the 14. I'm going to suggest, if you ask me the question, it means that you have it and that you're thinking of getting out of it. Do it in 2 phases. It's at 12.02. It's down 8 cents today. But it's in an area that has been a desirable area. I don't want you to get out too soon. At the same time, it's a great question because it's gapped down. Look, this is the 4 bars, but 1 bar at least try to get into the gap. That's different to the GDX or the GDXJ. So this is a little bit more positive. So I'm going to say, because you asked the question, get out of something that makes you comfortable. That's number 1. Number 2 is, within the context of GDX, why not give it just a little bit of room? I don't know where you're in. If you're in with a really nice profit, then take the amount off that you're very comfortable. It could be half, it could be a third, it could be 2/3. But I would hold some because the stochastic is holding much. It's at 18%. The MACD is just starting to see the histogram improve. There's a lot of work to be done, but it has attempted to fill the gap. So the difference between getting out at 12.04 or today's low of 11.85, I'd say 11.84. I'd split the next exit point into two. Get out of whatever you're comfortable with now, and then at 11.84, I take a split position and get out of that, and I try. And let's look at it again in the next day or two. I don't want to see it break 11.58. That was the low of the 25th. But if it holds and all of a sudden you're looking by Tuesday or Wednesday, it's gone 1 penny above the 12.40 high of the 26th, that means it wants to fill the gap. And that gap low is 12.45. So all of a sudden you've got something that's starting to turn around within the rectangle, going from the lower end of the rectangle, because that's the rule of thumb that I have. Prices very often to the penny. We just saw that in a bunch of stocks. To the penny, it goes to the bottom, well, within pennies, and now it could start moving, drifting towards at least halfway. So I'm just saying that's what I'd do. Take off whatever you're comfortable with now, 12.07. I'd have a stop in the next 2 days at that, what did I say, 11.85 was the low. I'd make it 11.84, and then another split stop of, yes, and then split the next part of that, whatever's left. So that you got something there, because you might want to get back in if it starts to hold very well. Now, talking about this particular in the energy sector, look at this. Look, CVX, Chevron, fantastic. Almost the same pattern. Look, it went into the rectangle formation, but it took out the left side low. I had the peak E, and I said it's under the previous high of 174.76. Yes, only by 22 cents. 22 cents. But it's a failure because of the right side pattern. And look what's happened. It's pulled back. Look at ExxonMobil. So these patterns, this is a little bit better. You see Exxon, that's exactly your chart. Look, it gapped down. Look how 3 days ago it tried to fill the gap. It failed. Yesterday it filled the gap, and today it's slightly higher. So each one has its own pattern. The pattern I was looking at for you was not the GDXJ or the CVX pattern. It's the Exxon pattern that says, hey, this is a little bit more positive than the others. So that's what I'm saying. I hope that helps you, and let me know how it works out. I'm going to put it down here so that I don't forget to look at it by Monday or Tuesday. So that is ERF. I looked at it years ago, and I haven't looked at it for ages. Next question is, yeah. Okay, so within all the stuff I wanted to do for today, I'll do it tomorrow. I've got a whole bunch of double tops and double bottoms. Look at Microsoft. Microsoft trading up 40 cents at 283.51, and look what's happened. 270 was the round number low in the 8th, screams up to the 315 area at peak D, comes all the way back in the arch formation and goes to where? 270.77, and then has a nice bounce. And that's why I'm saying that the QQQ, I'm watching this very closely. The market, Tom O'Brien always likes to say, devious markets. And devious, I've said we've had each day we've had a 4-session day, like micro currents or micro levels looking at up the mountain. We've got micro phases in the market. So what we're looking at here is the Qs have come down to 318.14. If there is no rally whatsoever in the next 2 hours, I would say that's really not very good at all. But if there's just a slight rise, we could see just another burst of energy. And there may be a pullback. I would love to see a closing burst of energy only because of those monthly charts. It's really important. This is so ugly. This candle in the QQQ monthly, especially with the Chapman silent doji after the 8.71 high, and that this is really important. That was the November high. December had this little, I call it the silent doji. It's one bar before or one bar after a major high or low, and you don't see it. That's why I call it silent. I had a webinar once on this. So we'll see what happens. Day is young. We'll see what happens. Dow's now down 12.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So the VIX index, here's another thing. Look, the VIX index is up 0.11 at 3171. There is just, the way I read the market at this particular point is that there's a huge amount of vulnerability. The vulnerability has to do with not just one, but it's really 3 or 4 different areas that are almost always a concern to the market. So you don't just have 1, you have 2, you have 3, now you have at least 4. Well, this is the buying intensity that I'm seeing on very small moves. Basically, these, I mean, look at the percentage moves. We're talking about small moves, even though the S&P at one point was up, huge, and the Dow was up almost 400 points. That's not the issue. The issue is, how does the volatility index represent what we're looking at? And Kevin, I will talk tomorrow about, because that's closer to the end of the month. It is the end of the month for the market, and I'll talk more about the actual Chapman wave notations, excluding all the stuff I'm talking about right this minute. And basically what we're looking at is the buying intensity the last 3 sessions, you can even say the last 5 sessions, from the 20 to going to the 20s in the percentage on the VIX index, that's really important. But holding here, it just says to me, there are too many people on the one side of this particular trade. And therefore, the market loves to I always think of the scales of justice with the weights on this side and the weights of that side, and you're trying to get a balance. There's always some kind of a balance. And my suspicion, just on the very short term, and that's why I'm saying the monthly candle is so important, between now and maybe Tuesday at this time, I think it's going to be really important, because this VIX index is suggesting that the market at this point, over the last 2 days, especially if I'm just talking about the Dow technically, the way I'm looking, if someone said to me, this is the level of the VIX index is at 31, I'd say, wow, the Dow must be down at the 32,800 level. But it's 500 points above that. And that says there's something going on that could be a release to the upside before once again we have to worry about those at least 4 factors that are important. Have a wonderful day. Stay tuned for Larry Pesavento. Check out my opening call, my daily newsletter, and I'll be back tomorrow. Great programming.